All right, how's it going? Let's see. There we go. How's it going, everyone? This is Anon. None of this is financial advice. This is for entertainment purposes only. All right, so I need to get everything caught up. It's been a long time since I streamed. I got sick over the weekend, and my kid, I sort of get every single day. It seems like he brings home some sort of new sort of plague from daycare. It's just one of those things. Oh, and my dog is going nuts too. Hold on a second. Let's see. All right, here we go. What's up, Benjamin? How are you, bud? Yeah, it's fine. I was gonna say it's just you have kids in daycare and it tends to they just bring home all the germs. How's the volume? Everything good? It's been a while since I streamed, so I have no idea if any of the settings are still up. All right. So far, it looks like we're okay. Let me move a couple things around. My kids were down here in my office, and a bunch of the stuff is messed up. Wait, you can't hear me? Hello? All right, make sure you guys can actually hear me. Can't hear you. Asking if the volume is still good. Huh. Okay, you can hear me? Okay. See, you guys are messing with me, and now I can't. All right. How's it going, everybody? Loud and clear. Good stuff. So, it's been an interesting kind of couple days in the market since we basically started this down channel and then broke below and then broke above and then back tested and we've been hovering above. Been super interesting kind of seeing what the market's going to do right now. Obviously, you've got things going on with banks. You've also got, um, you know, a lot of theories on credit default swaps and how much leverage they had to dip into, or sorry, not liquidity they had to dip in for the banks. Interesting what's going on right now. And, when you kind of look at, different times in history where you have a lot of choppiness, you can kind of tell, like, if you kind of just look at the SPY and go back in history, like around 2018, you had a bunch of choppiness. You came up and then broke down, came back up, right? Nice V shape right there. Ran for a while. Everything was looking good until COVID hit. Then this just massive run on basically the Fed just turning on the money printer. So, Brandon posted something in AMC. Pretty interesting anomalies. Yeah, you know what? That's something we should probably look into tonight. Let's take a look. Because I know that was running today. Didn't it go up like 20% at one point? Like 25%, I think I saw. I haven't been like sitting behind my computer trading. I basically checked in the morning. Nothing really was happening. I put in a couple buy orders and a couple sell orders. And then I don't think any sell orders hit, but a couple of my buy orders hit. But besides that, I'm kind of like in this holding pattern because a bunch of the stocks that I'm in right now, I'm planning on being long on. So yeah, we can talk about ATER. If we want to go in alphabetical order, let's start with AMC because they had the most like kind of interesting day, right? They had that huge green candle up. They did feed back a little bit back into it, but I mean, yeah, it was over 20% in a day, which doesn't really make a ton of sense because if you know, Ape also had a little bit of run, but not nowhere near as big. And so it's interesting that AMC had the pop. I would have thought APE, because eventually APE shares will become AMC shares, and that's how I think shorts were basically doing a lot of the covering. Was basically they were just banking on that APE was going to be this, massively diluted preferred, share, and they would be able to convert some of the stuff when they basically tank the price, and so they would be able to basically, called arbitration, they would be able to basically even out the price and kind of get some good deals on when they covered. But I know they had the news that came out that Bezos was looking at possibly Amazon looking at the AMC. Now, he may do nothing about that, but just the news of that, would have, obviously sent most things, going nuts. So, but it did come back down during the day. So let's see what we can find on AMC. So let's take a look. AMC News. Yeah, Amazon reportedly considering purchase of AMC Entertainment. We have a headline here. All right. It's preliminary. No offers have been made, but, that would definitely be an interesting move. Now, obviously Bezos doesn't have any problems with money. You kind of have a built-in huge audience. If, shady Adam Aaron was to just pitch it and say, hey, listen, guy, I've got a whole bunch of, people who believe in us. You have any interest in this? I mean, that'd be interesting. The only thing that I thought was weird was it was Charles Gasparano who actually reported it. And he's super bearish on AMC. And something just seems off with that. And I don't know if I've just been in the market too long and it just anything that looks weird is going to make me question. But hold on. Where's my... There we go. Hold on. There's my trade view. Bring that back over. All right. There we go. So, I don't know. Something just set my spidey senses a little tingling on that. All right, so here we go. So that's some good news, though. I mean, analysts are saying extremely unlikely, but weirder things have happened. I don't know. I'm trying to figure out what would be the reasoning. Amazon, I know, already has a good portion, and Bezos doesn't run the day-to-day, so it would be, I guess, now the new CEO of Amazon that's looking at this. I just feel like if Amazon gets too big for its britches, they're going to break it up. So I just don't know if that's the thing I would jump into if I was Amazon, but they do have a ton of just buying power because they're Amazon. And they just print money with AWS. So you can afford to take some risks on other things if you want to. Yeah, where's the poop? I don't know. I'm going to put you this way. I'm not buying AMC at this point. I know some people are, and that's totally fine. Amazon movies at specific theaters only. Yeah, I guess. All right, I've kind of frame everything this way. How do you make money, right? So in the world where basically you're competing against Amazon in pretty much almost all things nowadays, whether it's cloud, but if you're in any sort of retail, right? Amazon is a behemoth. And so say, for example, you're in the movie space. Well, Amazon has Amazon Prime, and Apple has their own streaming service. So do a million other things. And these are all things that you can sit at your house and do. So where do you make your money? And there's always going to be some people that love going to the theater, having that theater experience. AMC's biggest rival now is Orville Redenbacher. That's funny, Mark. Yeah, and I know they're making popcorn now, but it's like how much popcorn are you selling? And like, what are your margins on? Like, I don't know, just getting into a new space, it seemed to me like their revenue was shrinking year over year before they had the support of retail traders. And I'm sure it's helped having some retail traders encouraging other people to go to movies, going to movies themselves that they may have watched at home. But, how long does that go? You know, and I think the same thing though for other industries like GameStop. GameStop obviously is going to need to reinvent themselves in some sort of way where they're actually making money, because digital downloading for games is becoming pretty much the normal now. And so what do? There's always going to be people that want this, but at the same time, when the industry is going that way, how are you making yourself relevant? And I love GameStop, but at the same time, you have to answer those hard questions. And cutting margins and like firing people and reducing costs is great. It slowed down their cash burn. They posted a profit for the first time in a long time. But at this point right now, I don't think the NFT marketplace is going to be racking in money until they actually figure out some way that people are going to spend money on that platform. So like, how do you make your money, right? And so my question, for AMC is, when you're in this, what are you doing? And I know they've said about like, doing Zooms for conferences and other, theater things and UFC fights and all sorts of other things. But yeah, like the rent on a movie theater is huge. You have to keep it cool. There's a lot of expenses to go with that. So like, and then people, how often are they going to go and actually go into a theater and sit and do that versus my couch? I'll be honest with you, I haven't seen a movie in the theater since I'm pretty sure Rogue One, and I don't know what year that came out. I think that was the last time I went to go see a movie. When did Rogue One come out? 2016. Okay, so I haven't been to the movie theater since 2016, I don't think. I can't think of one movie I've seen since that movie. And that was because my buddy, who actually likes going to movies, like basically begged my wife and I to go with him. And I was like, sure, buddy, we'll go with you. But yeah, I don't know. So I just, for me right now, I want to know how they're going to get themselves out of the hole they're in. Because, if you kind of think about AMC like this, right? If we just go into their filings and just take a look at their last 10K, right? And we look at, let's look at their liabilities. And there'll be a lot of them listed, so that's probably not what I should put. Put the balance sheet. Oops. I'll get to it someday. I just scroll. Okay, here we go. Yeah, like your revenue, right? So year over year, much better than the year before, and much better than the year before, right? So that's, revenues. So that's great. But it was closed during this year and into this year. So anything was going to be better than that, right? So I guess, you compare that against, do they show you what revenue were? And like, let's see if we can pull that. I'm going to try to pull AMC revenue for what was pre-COVID. So like 2019, right? Yeah, I mean, so I'll just pull this up. So even though it's recovered a little bit from like the year before and the year before, you're still just like lagging so far behind where you were. I mean, just like in half. So, and not only that, but they added a whole bunch of like liabilities and like debt during that time, and it was crushing. And Adam Aaron basically diluted on people to basically just keep the doors open, and gave himself bonuses, sold his shares, and so I don't know. AMC is not a stock that I particularly trust the leadership. I'm just not a fan of theirs. Never really have been, and it's not a stock that I'm buying and holding for the long term. However, if they got a deal with, like an Amazon, they would set a buy price if they were really just going to basically acquire them. and then you would be able to get out at whatever shares that would be going for. So for some people, if you bought really high up during the squeeze and you haven't averaged down, then you're probably screwed. For others that have, you know, been around for a while, you know, that'd be fine. But just reading through. You guys are funny. Oh, Dune 2 will be awesome. I enjoyed Doom. I also waited though until you know, it was out on HBO. Yeah, so just, but you know, look here. Like, it's just straight up right here. Your total assets, right, were about 9.1 billion and your liabilities were like 11 billion. So you have a negative shareholder equity right now. You've got a float that's like 500 million shares, and it's going to even grow larger when they do the conversion with ape stuff over. Then they'll resplit, and then like it just, I don't know. It's something just seems weird about this. So I don't know if they're just trying to pump it with news. It seems weird coming from Gasparano, out of all people. Because he's not a fan of AMC and likes to openly mock retail. So something just seems off here. So I got that. Remember we were talking about that, and we were like, "Where's the poop?" And we found it for what ticker was it recently that we were looking at that, and we were complaining that there's some sort of poop, and then the stock just like tanked the next day. I don't remember which one it was, but it just same thing with like when GNS first came out. I was like, okay, maybe give the guy a chance. He's like talking a good game, but I was like, something just seems weird here. Was it? Yeah, BBBY obviously. They've just been in rough shape in general, but it wasn't that one. There was something else that I was talking about specifically in here that I was like, something seems off with this, and then like we were supposed to dive in, and then the next day it like tanked. But that would have been like 2 weeks ago or more. I think that was the last time we did a stream. Sorry, I'm losing my voice a little bit. All right, so for me, I'm staying out of this one personally. Obviously, nothing I say is financial advice, but I'm just holding off. I just, if you're playing it for swing, that's awesome. And if you know, for me right now, I'm staying away from the thing. Okay. Let's do ATER because we're going in alphabetical order so far. So ATER, obviously, a bunch of people are sitting there. It goes down. Once it goes below 80, everyone freaks out. And it's one of these things where we kind of like are just waiting for the next quarter. And it's going to basically do whatever the market's going to do. It may be, it actually doesn't even matter. At this point right now, there's zero interest on the stock. You can tell that by the volume. So if we come here to Ethereum, because right now there's absolutely no interest except for people that are already holding it, right? Here's the deal. We have like no volume. So we'll go over here and you can see the tiny little volume bars. We're barely trading anything back and forth. Nobody's really buying. There's not a lot of selling. Utilization did go up a little bit, but at the same time, that's probably just because there is some, you know, people like basically just our group is the only ones buying that. Hold on. For some reason, it keeps telling me Ortex is not secure. That's weird. Why is Ortex not secure? Okay, let me log in. All right, here we go. So, go here to Ethereum. So at this point, it's not even a squeeze stock anymore because like it's been diluted on basically during the last run up. It kind of went south when Armistice sold off. I'm still convinced there's a bunch of shady stuff happening, especially when bots were hired and all that stuff. So let's take a look real quick and kind of just go over what's going on with the stock, right? So at this point right now, the short interest is only like 15%. It's not very high. That means that shorts, though, are reducing, you know. Let me show you. So the short squeeze is off, but that doesn't mean the stock can't go up again. So as you see right here, as the share price has been going down, utilization is starting to climb again, which is interesting, right? Not just our group. Yeah, there's other groups I'm sure that talk about Ethereum. We just happen to be the ones that talk about it a lot. And so if you check this out, right? So we've got some random spikes of utilization going up. We already know from previous things. Let me log into Fintel so we can kind of look at that again. We still know that there's at least a good amount of retail, people that are either stuck or holding or just long on the stock, right? So if we go in here and I pull it up for you. All right, here we go. Thanks, Mark. Appreciate it. Yeah, I don't typically say the thumbs up and like and subscribe, but I appreciate that. I figure we got a small group that listens in on these things every once in a while. Just a couple of times people stumble upon it and stick with us, and they become part of the group, which I'll link. Or if one of you guys can link the Discord group, that'd be great. But here, check this out, right? So we need to go to ownership. I think retail ownership, was that what it's under? And I think they were still listed as like the number 2. Yeah, it's listed basically as like 1B. They're pretty close right here. So Twilio and Ethereum are the 2 highest retail owned ones. And they even said we own close to like, and this is only like a handful of us. A handful of us own essentially probably, I would say, 4 to 5% of the float just by ourselves. The reason I know that is because one of our buddies, Kenny, he is not registered on this thing, but we know that he owns over, I don't know, like 150, 160K shares. So that's a good chunk right there. And so I would say that number is much higher than we actually think. These are just the people who actually went through and registered. But a handful of us did it, and we own basically, we know for a fact we own almost probably 4 to 5% of the float by ourselves. Do you guys know if IATE Acid's registered on this too? I don't know, but we know that there's a good amount of retail ownership, right? Is Bad Dad? I don't know if, and I don't know. I think he actually said he was not going to do this either. So I mean, we might own 10 to 12%. Who knows what we own? I just know for a fact because I said he's not rocking ATER. Yeah, and that's fine. He may have gotten out at some point when he hit a stop loss, but he's one of those guys that comes in for swing plays, I think. So that would be interesting over. You know several individuals who have over 75K shares. Yeah, and who knows, how much this number is, but as the stock price gets lower, here's the deal. The lower the price goes, the more power retail has because people just average down, right? And a lot of people now have better averages than the people who own the warrants. There are people who have like $1.80, they've got, someone told me they've got like a 120 average and they've been buying for a while, but they just weren't that big. And then when the stock keeps going down, they just keep buying more. So it wouldn't shock me to see the utilization start climbing again and then cost to borrow and everything like that eventually start going back up. But at this point right now, it's just not a very popular stock. And so until I think the next quarter when they're supposed to be getting closer to is it next quarter or is it it's third quarter that they think they're going to be in positive EBITDA. So we will see. We will see. But for right now, what I'm looking at is this on this stock. If we draw something out right here, let me just pick a color real quick. Let's do a horizontal line. So it should be about there. This is what I would be looking for. I don't know if it will go down that much, but see this green line right here? This is when Armistice can actually start exercising the $2 warrants. So what we would actually end up seeing possibly is a couple more swings down possibly right before April 4th. Once April 4th happens, then all bets are off the table because we have no idea what Armistice is going to do. The last time they were able to unlock their warrants, they pushed it like within 10 days. Now, granted, they've had these 320 warrants, for a while, but at the time they've already ran up once, so I don't think they were going to go for it again. They already had it right here, moved up to 7, came back down, right? And so at this point right now, this was when the extra money was issued out, brought it down. We had this like massive dip. And I think this was actually just when they issued out this huge sell-off right here, Armistice was selling this entire time. So Armistice was the ones pushing down the price by selling off their shares because they had so many warrants that if they were started to push up, they were going to have to either push it up in waves and then issue out more warrants, or not issue up, but exercise more warrants and then get rid of some so they could do the full amount they had without going over 10%. So I think what the plan right now is possibly a double bottom, and then we could see some like recovery on that. But you kind of see a lot of these bleed offs right here. I don't know if this is like institutional. Short interest hasn't really gone up that much. So my guess would be at this point, I don't think most retail traders are selling it. At this point, like one of my buddies was like, dude, I'm already down like a lot. Why would I even sell at this point? And I'm like, that's how most of retail people I've talked to feel the same way. They'd rather just get their averages down, and then if they get a spike up at some point, they'll be able to, get out if they want to, or if they want to stick with the stock long, they can just accumulate down at this range. And then eventually, if they do go positive EBITDA by the end of the year, then you're looking at like you had a pretty good, accumulation period, and then you were able to kind of move back up into a normal kind of like, my guess would be this would be more like the range in here. Because this was an area of liquidity that was holding pretty strong up until they diluted. So if they can post some positive news, they'll probably move back into this range again. So if you're able to, get your average down here, that would be good. Yeah, 67 cents was the first bottom. You could hit that again before a second run. Yeah, and the 75-cent support line, which is right there-ish. They're saying like 77 cent, but yeah. Or was that? No, that was today's price, right? This is just today's price, I think, this little dotted line. Assuming at least one of the sets become unlocked, So here's the thing, Ben, right? I don't think it's necessarily priced in at this point, because what's going to end up happening is this. If they get the stock over $2 again, right? So at some point they'll get the stock over $2. Say they exercise those warrants. Those warrants, I think we figured out it was like, what was it, 266 would be how much they would have to go over 266 for them to profit on the warrants. When those warrants get exercised, though, they have to pay the company those $2 per each share that they get to exercise, right? So at this point, what you will find out is that each warrant right here gives the company extra cash. The cash obviously helps the balance sheet. So it kind of evens out in that exchange, that if they got the stock price back up that level, even though they would dilute out, how much dilution was this on the $2 warrants? Let's see, the $2 warrants, it was about 10.5 million shares. But if they go positive EBITDA and they have more cash, it might equalize, and then it might, you could see maybe the 1 to 2, 3 range for that. But obviously, that's much better than 67 cents or 79 cents or wherever we are right now. Nothing goes down forever. It seems like every time we've fallen like pretty steeply, there's been a spike afterwards. So interesting to see. I think this was mainly just Armistice selling off their shares. Then somebody played this to the upside and then probably took profit. And then since then, they're trying to get the stock price back down. It's easy, though. Let's take a look. Yeah, April 4th, good news set up for the future, for third quarter. So I think eventually this one will pop again, and it will be popping into this range right here. which for a lot of people, that's a pretty nice run if you got in down at the bottom, or if you've averaged down enough where you're getting closer to at least breaking even or profitable. So we'll see. We'll continue to watch it, but that's kind of what's going on with Ethereum right now. Their earnings weren't that bad. They had $43 million, dollars, which for Ethereum, that's pretty good right now. We're used to them barely clinging on. I mean, they have to keep 15 million anyway, but at the same time, it's still better than where they've been in the past. So we'll see. And if they exercise those warrants over $2, they'll have a lot more cash too. So there we go. All right. I got to cover BBBY just real quick, just because there's so much oh my God. This is like my pet project right now, was trying to explain to all the people who got caught in this. And I'll just give you a scenario. Dog ass hand grenade is here. Oh yeah, that's right. You were the one that writing the DD on PXMD. Nice. Congrats, man. Congrats on that. Yeah, I'll be honest with you. I've been working so much, like actually doing work, that I have not been able to keep up with the Discord. So I missed like a bunch of plays. So I'm kicking myself, but at the same time, it's just, I can't help. Spring is when we get busy again. And then I'm usually not in the office as much during the spring, if you guys remember. At the beginning of like last year, when the Ethereum was running, I guess it started running right about now. I was in the office just because I was like telling my bosses I had to be. I was like, oh, I got to finish a couple of things on the computer, then I'll be out in the field. But after that, I mean, during the summer, it gets really busy, so I'm not in there as much. Yeah, I'll take a look at it tonight just to see if there's any warts or anything I see. But like, yeah, congrats. All right, so let me just tell a story, and it's just a recent story. So, BBBY, Bed Bath & Beyond, was out of money, and they were going to miss a bond payment. And so I want to kind of just simplify things down. If you miss a bond payment, you're at risk for bankruptcy, because the people that lent you money want their money back. And so they have the rights to basically liquefy your company and take everything, because you didn't hold up your end of the deal, right? So if this was any other company and they missed a bond payment, they'd probably be shutting them down. But Bed Bath & Beyond was special because Bed Bath & Beyond is a meme stock. And what do you have when you have a meme stock? It means you have a lot of retail traders who are interested in your stock, even though it may not have a healthy balance sheet. So if you think, I want you guys to think about this as if you were a hedge fund, right? So you're a hedge fund, and they come to you and say, hey, we're searching around for money. And we know hedge funds lend money to these distressed creditors all the time, right? So like Bed Bath is like looking around trying to find somebody that will give them money. They go to Hudson, right? So Hudson is like, all right, we've done this deal before. And you know who they did the deal to? Anyone here? They did it to one of the short squeezes favorites, BBIG. So you guys remember, I guess it was this area, right? The huge gap up and everything was going great. And then this. Just death spiral and getting killed. And what you learned was Hudson gave them convertibles. And convertibles are like the worst form of dilution. And so what ended up happening was, let's see if they have them listed here. Yep, Hudson Bay right there. Hudson Bay. They did these full ratchet, like cashless, like convertible notes right here. And you look Hudson Bay, right? They still have more. right? So like these guys basically, and you can see right across here, Hudson Bay. That was some other groups doing it to them. They essentially just diluted the crap out of the stock. So this is when they were like squeezing, right? So if you look at June of 2021, June of 2021. So like this range, and then right. So like it started here, it was chopping around, and then this was when most retail FOMO'd in. And guess what Hudson did? Because they need to raise cash because they were running out of cash. They diluted the crap out of them. So look at this. They go from 30 million shares outstanding to they diluted 70 million shares in a matter of like 3 months. Then on top of that, they jump up and dilute another like what was that? 39 million or whatever. And then all of a sudden they jump to 233 million shares outstanding. So in 1 year, you added 200 million shares of dilution, which killed any squeeze. Because remember, they were going to squeeze to the moon, and all of Ethereum people were suckers, and we are suckers. But at the same time, we didn't get diluted that much. We got diluted and it killed the squeeze, but we didn't get diluted that much, like half that much. And there's still more on the table, by the way. Like right now, they've got the 248 million shares outstanding. They're at risk of being delisted right now. And it's because Hudson set them into a death spiral. So that was different, though, right? BBBY is different. Then we go to MULN, right? And I wrote a DD explaining all this stuff. All right, here you go. What do you have? What do you have? You've got a nice, beautiful little small company, 23 million share float, tiny. And guess what? They need some money. So what do? They go out, and who gives them some money? Hudson Bay. Where are they at right now? There's a whole bunch of them. HUSA and Hudson and a couple other ones all come in, and they just absolutely bend them over. That's right. This one was more HUSA than Hudson, but I do think they had a hand in it, but I can't remember now. But yeah, this one was HUSA that did the same exact thing. But these convertible notes, these things are deadly. And not only that, but they basically convert. Each note can be converted at 5% discount, so they have built-in profit on these things. And look what they did to this company. They went from 23 million shares outstanding to they have 1.75 billion shares with another like billion on the table in dilution. It's crazy. But it's going to be different this time with BBBY, right? This time it's different. Well, guess what? Here's where they're all sitting there, and they were all going to squeeze to the moon today. And my only annoyance is they banned me from the sub, which is my biggest annoyance, because like I was actually trying to explain things there, and then they would all call me a shill, and that's fine. But at least I was able to talk there. They banned me, and now nobody's getting to hear this stuff. All right, so here's the deal. These guys here, yeah, right here. All right, so they put this out on February 6th, and here's where I want you to pay close attention, because this is what I think is just the dirty thing. It's kind of like when Ethereum put out the good news, and then the next day they announced dilution. Look at this. What day is this? February 6th. They pushed the stock from $3 all the way up to basically $7 a share this day. And then after hours, they end up at $5.86, and then the next day they announce dilution. Right? So they pumped it right before they actually diluted on them. So what it says in this thing, and this is where they all were like bullish on this for some reason. But I tried to explain to them, I'm like, this is not good. This is dilution. This is the same thing that happened to MULN. This is the same thing that happened to BBIG. This is the same thing that Hudson does to like all these companies. You guys think they're going to hold it, and they're not going to. They already have in the price protections area section. Let me see. Price protection. Oops. Did I call it something else here? Let me just try this. Yeah, right here. All right. So 92%, right? So they have an 8% built-in profit on every single conversion on this thing. And the lower they get the VWAP, the more they get to convert. So there's literally an incentive to drive down the price. And no, I'm a shill, blah, blah, blah. And these things are going to $6. No, that's not how this works. And in fact, I posted it in the Discord how it works. They basically got like a bunch of bonus shares for nothing. I mean, technically they gave them $225 million in the first thing, but like they structured this thing where Hudson got essentially 100 million shares for no additional conversions. It was just like a bonus, and like to sweeten the pot, trying to keep them to like hold it. And on Shillsworth. Yeah. So here's the problem, right? So you have a stock that all these retail traders are in on. A lot of them got trapped during this thing right here. They thought it was going to squeeze because you already had this rip here. You bled off a little bit, and then you have this huge rip here. Everyone thinks it's going to the moon, so they all FOMO in, right? Everyone's buying options. Everyone's doing this stuff. And the entire time, they're selling their shares the second they get them into the market, and they're driving down the price. And everyone's going, whoa, it's on Reg Show. They're on Reg Show because shorts are the ones failing to deliver. And I know that sounds ridiculous because that's exactly what they're going to say is, you know, that's what we're saying. Shorts are failing to deliver. They're failing to deliver because they're shorting so much. They're not bothering to find locates because in 10 days when they actually do those shares, there will be plenty of them to do it because they were basically diluting something like 8 million shares a day. So during this entire time when I was trying to warn them, they're literally just driving down the price because they're selling like an average of 8 million shares a day into the market. And so everyone's convinced because of Reg Show that this thing is bullish and eventually this thing's going to pop. And I will say this, at some point this thing will bounce because dilution will stop and then they'll turn on the spigot to basically slap the ass, get this thing running again, right? At some point that's going to happen. But here's the deal. There is now so many more shares out there. Yeah. Reg Show means nothing because the problem is it's not like, okay, after 10 days on or 13 days on Reg Show, you have to cover. That's not exactly how it works. What it is you as the entity that failed to deliver your shares are required to cover, and that's fine. But if the company next to you starts failing to deliver 10 days from now, and on day 13 for me, day 13 on me, I cover mine, but they just started theirs on the 10th, they're still on Reg Show. So it's like a game of hot potatoes. And not only that, but like shorts might even be choosing to do this because they know that retail thinks that Reg Show means squeeze. So they just keep it going knowing that there will be people hyping it. I don't know. So let me kind of break this down now. So now you've had this huge problem where you've lost basically since this date right here, at 6, you lost about 90% of the stock's value in like a couple weeks. So what you end up here now with is this. You're going through and you're like, okay, there's got to be some sort of like good news. The thing that shocks me is this. So they all keep saying that there's no dilution. They're like, no dilution's happening. It's not happening. And I'm like, what are you guys talking about? Look at this thing. If I put in here Read this sentence right here. Effect on authorized but, sorry, I have a candy in my mouth. Effect on authorized but unissued shares of common stock. Currently, we are authorized in our amended and restated certificates of incorporation to issue up to the 900 million shares of common stock. The total number of authorized shares of common stock will not change as a result of a stock split. As of March 15th, 2023, we had 335,404,588 shares, 335 million shares of common stock outstanding. And people are like, oh, well, they're talking about the reserves. The reserves went down. It's not real dilution. You can pull from reserves. Like, oh my, all right. Reserve, let me just break this down because I know there's some people that don't understand this. Reserve shares is when a company buys back their stock, right? So Bed Bath & Beyond, like under Tridden or whatever his name was, Mark Tridden, I think his name was, the former CEO, he bought back BBBY shares. And when you buy back BBBY shares or any other stock shares, they go into what's called treasury stock, where they're basically just sitting dormant. They're pulled basically, though, from the float, and they're just sitting there in the treasury. You can do it one of two ways. If you have to then go through dilution at some point, you can choose to dilute out of your treasury, or you can sit there and issue out new shares if you have a shelf. Either way, though, that's it. Like, that's why the 200 million shares came out of the treasury. It is real shares. Yeah, BBBY people have really, really made me mad. Because they literally were sitting there like banning me and mocking me about dilution. And I'm like, it's right. It's literally in your paperwork. This is signed by your CEO. Look, that's the name of your CEO. And guess what? It's she signed this. But no, that's not real dilution. That's dilution. So you think you sat there and went from $5.86 to 76 cents because this is all just shorting? No. Your CEO signed a document saying, oh my God. It just makes me mad because, like, there's innocent people in this play that don't understand this, and they're literally being led by people that don't allow people like me to talk to them because they know that if they actually hear like how this all works, this was a wealth transfer from poor people to pay JP Morgan and the bondholders. Don't believe me? Think about this in practical terms. Ready? So say, for example, who has the most to lose in Bed Bath & Beyond going bankrupt? Think about it. Like, who has the most to lose? The bondholders. They get nothing, right? They get to scrap off whatever's left and sell it off for pennies on the dollar. And that they're screwed. They'll just take a huge couple $1 billion loss because that's what they lent out to, Bed Bath & Beyond. So retail needs to fight shorts the CEO and himself to make a profit. It can be. I mean, like, the problem with this particular one, though, is Bed Bath & Beyond basically, I don't think their board really wants to turn it around. I think they basically want to sell it off for parts and move on. They're going to get paid during this process. Sue Grove's going to make like $1.5 million a year to just be the CEO. So, yeah, she's got some shares. It doesn't matter to me. At this point right now, she's making her money just being the CEO of the company, right? She can take that $1.5 million and buy a bunch of stuff afterwards. Right now, honestly, the ones who have the most to lose aren't retail, but rich ones. Yeah. So here's the thing, right? So JP Morgan right now could lose billions of dollars if Bed Bath and Beyond went bankrupt. So what do? They basically go out and say, "Hey, why don't you go fundraise?" They get some people on their board to say, "Hey, go, hey, you're a meme stock. Go raise some money." So what do? They go out to Hudson. Hudson's like, "I'll give you a bunch of money." And they're like, "Okay, well, how much do we need for our bond payments?" "Oh, we'll give you 224 million, but you're going to basically give us essentially 900 million shares of dilution." Okay, who cares at this point, right? So they convince all these poor shareholders of BBBY that it's squeezing to the moon while they're sitting there diluting on them 8 million shares a day. The stock keeps going down. They can't figure out why it's going down because all their geniuses who don't know how to read filings basically banned me and won't let people like me talk to anybody. So, yeah, I'm a shill. I'm a shill. That's right. The person that's trying to tell you the truth is the shill. At some point it will bounce, and I hope some people get to hear this and they get out on that bounce, because all I care about at this point is retail not losing their shirts on this. All they're doing is lining the pockets. You know what happened with the bond yields, or sorry, what are they called? I guess the pricing on bonds went up once they structured this deal because bondholders were actually going to make money. Right, so they were going to actually get some money coming in. So bonds actually went back up on BBBY. And people are like, "Oh, that's bullish. That's great." And like, no, you're paying for it. They're taking your money. Look, they're taking your money and they're paying their bondholders. They've diluted the crap. They've diluted over 200 million shares of this stock. It's right there. It's in the price protection. Like if I go here and I go 33.5, right? Oh, sorry, that's the wrong one. It should be this one. You had 116 million shares before. Now you have 335. You just diluted over 200 million shares. Do you think that's good for your equity? No, it's not. All right. I'm done with this one. It's so infuriating arguing with these people. And they're like, "Well, what about this?" No, like, learn how this works. Help me. Like, I'm trying to explain it to you, and then they're like, "Oh, well, someone said this." I want to get those people in our group and just help them because, like, they need to understand they're being played. And at some point they'll get a bounce, and I hope they get out, or if they want to get out, if you want to hold to the moon and have it go bankrupt, that's great. I just heard a cat. Oh, my wife's cat's down here. Yeah, it's fine. All right. But anyway, I just hope people are able to get out. I mean, I might even play the bounce just because at this point, price protection set at 72 cents unless they amend it. So you could play the bounce on this thing, but they could always amend that price protection and it could go lower, but at some point it will rebound when the dilution's done. They'll think it's squeezing to the moon, but really it will get back up to like here. Back up to like $1 or $2, and then it will just slowly fade again. We'll see. All right. I do want to hit DTC, just, oops. Not too many. There we go. So this is one that we called out a long time ago. And I said it looked like it was consolidating. I bought a lot down here because I just thought that this was one of these that I like this company. And I know it's weird and it shouldn't be something that I should be investing in because it's a small cap that, like, but I like how they're running things, and they struggled during this time frame, but man, they had a nice bounce. And I think what happened was after earnings, this was the fourth straight beat. Each time you see a green E on here, that's a beat. They had 4 straight beats on their earnings, even though every other one they just tanked after their earnings. This one, on the fourth time, they're like, "Well, okay, fine. You guys are going to survive, and you'll be fine." And then the stock's now back up to like $7 a share. Or it was. I think it hit 7 here. Yep. But I mean, it got all the way down to 3 something. So I'm just showing you, like, some of these ones can do well if you believe in them, you stick with them long time, long enough to like give them a shot. Like, I was with this one for I think 3 quarters or something like that before we saw any sort of real recovery. But I like this one. All right. If you're not familiar with these guys, they make the Solo Stove. They also own the brand Chubbies, which does like men's shorts and apparel. I have a kayak thing and some other outdoor stuff, but I think they're a well-run company, and I think eventually they'll be back up into the $10 range. But in the meantime, there's a gap down here, like a pretty significant gap. So I wouldn't be buying up here. I'd be waiting to see if it fills here if the market crashes. Let's take a look at GameStop. Oops. That's not GameStop. All right. Huge gap up. I'm still waiting. I do think at some point it fills this gap. So I don't know when that will happen. But there is this bull gap here at 1835. And that's where I'm going to place a lot of buy orders. Because I just think this is one of those stocks that, like, if retail just continually starts or keeps buying and DRSing, they're going to just go up at some point because there's still about 20% short interest, I think, that we saw. Let's see. But 20% on the stock that's this size is actually like $1 billion. Yeah, let's see. It's $1.4 billion right now. That's crazy. $1.4 billion shorted against GameStop. Oh, I did see they released the DRS numbers, but they didn't give like a specific number, right? They had to like break it down in code or something like that. Let me see. Give me a crayon. Give me a scotch. I can do a scotch. You guys want to have a nightcap? Anyone here want a nightcap? I'm going to go get my scotch. Hold on a second. All right, I'm back with my scotch. Scotch. Oh. Whew. There we go. Do you know the Muffin Man? All right, so let's take a look at the files real quick. Here's the 10K. Maybe I should put registered. A lot of directs. Hold on. You have it in the Discord? All right. Let me just see if I put registered. We can get all the registered accountants now, right? Can I put registered shares, maybe? Or maybe I should just stick with it. I'm sure it's right there. Nope. What do I need to put? DRS? No. Held, maybe, at... Here it is. All right. Our Class A stock is traded on the New York Stock Exchange under the symbol GME. As of March 22nd, there were 197. Interesting. So they're basically, it looks like saying that 25% of their outstanding shares right now are being held by record holders. Interesting. So they changed the way that they worded it. They're basically, instead of saying it as we have 76 million shares with our transfer agent, they worded it as 25% is held of their total outstanding shares. So let's do this. So if they're saying it's approximately... So 76 million shares of our Class A were held by record holders. That's interesting. So did that go down? 151 packet and T loaded. Good job, Random. There you go, bud. All right. I feel like that went down, didn't it? Let's take a look at their last one. Their 10Q. Didn't they say, maybe if I put registered, 71.8 million. Okay, so it didn't go down. It just didn't go up as much as everyone thought it was going to. I think they said 82 million is what the DRS bot was thinking, but they're saying 76, but I guess this was as of March 22nd. That was pretty recent, so obviously that's the DRS bot's off. Let's just assume that they're overestimating or people are lying to the bot. Whew. Probably need to clean my barrel. See some gunk on the bottom. I have this like charred oak barrel that I aged my stuff in. Probably need to get a filter or something. All right. Anyway. All right. So 76 million shares of the total shares outstanding. So how many shares outstanding were there? This is the old one. This is the new one. That's still a lot. Of a couple $1 billion company, apes own 25% of it. It's like a hedge fund. Let's do this. Yeah, you missed the ATER chat, but essentially what we just said was we're kind of in a holding pattern until we... see, now you're just making me go back and do it, but I'll just do it real quick. Essentially, this green bar right here is when Armistice can exercise their $2 warrants. We are... No, I'll move this down here. we are right here. So we're about to come up on this April 2nd, April 4th is when they can exercise these things. And so we don't know how long it's going to be. This is basically a double bottom right here at 67 cents. So it's possible we kind of track down here, maybe bounce off that. And then anytime after this green bar, it's game on for the warrants at some point. So we could see another run back up pretty soon after maybe hitting a double bottom. That's kind of what we thought. Okay. Back to GME. We'll go back to here. I still am going to place a bunch of buy orders here on the 1835 area. I'll probably put it for like 1840 or 1845 just to make sure it fills. But if it gets down that way, that would be great. Because I just want to buy more of this. And I want to make sure they're DRS'd, and I want to just play this game with, the short hedge funds because I think it's fun. It amuses. I've never seen anyone do this before. Like GameStop is the first ones I've ever seen where a bunch of retail traders went, "You screwed us, and now we're going to make you pay," and it's not going to be right away, but at some point. What's going to end up happening is, I don't care if they completely closed every short back during the squeeze. I don't care. What I'm looking at is this. Retail owns 25% of the stock in DRS. And that's not all shareholders. That's just the people who chose to DRS. And you could argue, I've got friends of mine who own like 5,000 shares. And it's like, $100,000? They got like $100,000 worth of GameStop shares, and none of them are DRS'd. Those Archegos swaps are getting rolled. Well, didn't they they have to write them off, don't they? Or are they just like putting them in for bad debt? I don't know. I got to read more up on that, but because wasn't Archegos, they were big fans of bullet swaps, weren't they? If you guys are not familiar, bullet swaps. Unlike resetting swaps, it's a swap with the notional price principal is consistent throughout the life of the swap. I'm pretty sure Archegos was big on bullet swaps. Look. So the TRS, right? So they would have actually gotten away with it had it not been for bankers with their mouths. So I don't know if you guys know the story of this, but basically Archegos bit the bullet only because bankers couldn't keep their mouths shut. So a bunch of bankers were basically, what's his name, Bill Wang or whatever his name is. He essentially said, "Hey, listen, I'm having some trouble. I need to kind of fix some collateral and stuff like that." And he was shopping it around with different banks thinking that they would keep their mouth shut. But all these different like investment bankers were like running to each other and being like, "Yo, he's got like a really bad, so you could short him." And basically word got out that they were vulnerable, and people started shorting, a bunch of stuff that he was long on. Like, yeah. I don't know if like people understand this, but he basically would have been fine had it not been him going and trying to get information from the banks. Yeah, it's a crazy story. I don't know if you can ever like. I heard it on Bloomberg. I'm pretty sure they were basically explaining that like, these bankers were running around like telling everyone to short certain things because they knew that he was like so screwed, and that's how those like couple was it Discovery and a couple other ones ended up running because of him. Huang got hung. Yeah, either way, but I'm pretty sure the story I heard on Bloomberg was pretty interesting when some like actual person from Wall Street was like, yeah, he kind of got screwed by his bankers, because he probably would have gotten away with a lot of the stuff had it not been for them running their mouths. But anyway, but yeah, so I mean, just so we are clear, total shares outstanding were what, like 30 shares outstanding, 304. So if we put 304 into the calculator, Muffin Man, damn it. All right, here. Scotch, get in my belly. All right. Here we go. 304, 200. Yeah, 76 million. And what's the share price now? 23. GameStop's what, 23.15. So apes own $1.7 billion worth of GameStop. That's crazy. Like, I want you to think about that. That's not like nothing. That's a significant amount of like retail ownership on that stock. It's like a hedge fund owning 25%. That's like a long-term serious investor. Yeah. I've never seen retail actually do that, where they're literally taking shares out of the DTC so they can't be shorted. So, something's going on. Something's going to brew there. GameStop, I think, will move again. But I hope it goes to 1835 first. Okay. I saw somebody else wanted... Oh, someone... Awesomeness, are you still here? You wanted Fifey, whatever. What, I don't know how you say it. Fifey. I know which one you're talking about, though. Faraday, right? Oh, that's a lot of cash burn. Okay. Awesomeness, I'm not sure if you're here, but if you go back and listen to this, yeah. So here's the deal. You got a lot of dilution on the table here. You have convertible notes. Oh, God. What is up with these companies taking these convertibles? Just do an ATM instead. Honestly, just get support from your own shareholders and just issue out them yourself. Let's see. Artigas, I know them. These ones already depleted. Yeah, they've got these convertibles right here. And full ratchet. Floor's 21 cents. So there's price protection in. Yeah, that's not a good thing. Here, let's do this. What's it? Like this? Faraday, right? Yeah, so you basically at this point right now, and you guys have to worry about delisting, because did you spend 10 days over this? So how many days did you spend over one? One, back down. 1, 2, 3, 4, back down. So you guys are still on the possible delisting because the share price hasn't been over 10 for over those days since basically August of last year. So you're coming up on basically a resplit, probably, is my guess. Just glancing at that, my guess would be at some point a resplit will have to happen for them to stay compliant, because they haven't been over that, and they basically have 180 days and 180 days for filing an extension, but there's a lot of cash burn for not a lot of cash left, which means that they had to do a deal like this. And they'll get $121 million, but they also gave up $500 million of dilution. So, yeah, I'm going to be honest with you. There is a price protection at 21 cents right here. So your floor, they're fully ratcheted, which is not good, and they gave you a 21 cent floor. So you know where if you wanted to buy, eventually, but There you go. How about bird? Bird is the word. I don't know anything else. Oh, all birds. I know them. They're cash flow positive, it looks like. Doesn't say dilution matters for this one. Let's see how they did on their financials. I'm skipping over a lot of their stuff. Oh, what is this? Give me a balance sheet. That's a lot of stuff I don't want to see. Okay. No. Here we go. Okay, let's see. Was there profit up here? Where's their assets? Here we go. Contracting current assets. So cash has gone down. Accounts receivable went down. Inventory went up, so they replenished some of their inventory. Prepaid expenses went down. So overall, though, less current assets. Did they buy equipment or something? Yeah, property and equipment. This is going to get depreciated. So, all right. Now, there is a positive here, which is their debt, even though it went up, their liabilities are still less than what they have for total assets. So that is actually a pretty solid thing. They can lose money for a while as long as that happens, and they have cash. 167 million in cash, and they still have more inventory to sell through. That's not horrible. Net revenue grew, so that's good. So they've grown year over year over year, so that's good for net revenue. They did take a bigger net loss, though, and we could probably take a look at why that was, but I just want to see cash flow. I mean, are they just absolutely burning through cash? That went towards what? Was it an investment, or is that a security? Some sort of security deposit? Equity securities. So they made some sort of investment. I mean, I'd like to see them shore up some cash, but I'm fine with them buying inventory as long as it's not going to sit there and just eat up profit. Yeah, overall, it doesn't look horrible. I mean, let's take a look at the chart real quick. You got a gap here off the bat. I can instantly tell that. That was on earnings. It looks like it's because it was a surprise of minus 13 million, or sorry, minus 12.57. Sorry, I can't even speak anymore. Minus 12.59 million. It looks like earnings was fine, but they missed on revenue. They thought they were going to have close to 96. They only had 84. Little troublesome, probably why they dropped so much, but they're still a new stock. This actually kind of reminds me, can I overlay two stocks? Not going to lie to you. Look at these two stocks. All right, so it looks like DTC was in gold, and Allbirds is here. But, like, they look kind of similar, don't they? Just saying. That chart looked familiar to me, minus the huge drop right here. In fact, they did the opposite, didn't they? Look at that. They're kind of doing the exact opposite from each other. That's interesting. How do I take off the other one now? Here we go. But yeah, like that's a weird thing. So on their earnings, they both basically just did the opposite. I don't know. I mean, I'll be honest with you. They're still fine on cash. It looks like they got earnings coming out in was it May? I mean, I don't know what their true value is at this point. The market clearly hasn't found the bottom yet, where they're like, this was a decent period of consolidation, but it looks like with earnings going down, you could probably scoop this up pretty soon. This doesn't seem like a horrible entry, but just depends on what's their shares outstanding. We'd have to look. Is there any other like warts on this thing? I mean, this is me doing it at a glance late in the evening, so I'm not usually my sharpest at this hour. But shares outstanding. All right, so they've, what was it, 17 million? No, wait. Is that right? I gotta do this. Bird shares outstanding. No, not bird. All bird shares outstanding. 150. Yeah, I don't hate it. They do have Class Bs, which means they've got some private investors probably that are in on this, but like the stock's been down like 80%. So I do think they'll probably bounce at some point, but they're going to have to find some solid footing, and they're going to have numbers turn around. I know people that like Allbirds very much so. I just think they were overvalued when they IPO'd. So my guess would be 4% insiders being held, 44% held by institutions at this point. Yeah, I mean, not the safest investment, but that I think they're going to be fine. It looks like they're finding their low, and maybe they'll be able to consolidate in this range and see what happens going forward. But yeah, it's still negative EBITDA, contracting revenue growth. It seems to me like it's just one of these companies that's going to be kind of like floundering for a little bit, and then you might have a quarter where they do, finally beat, and then let's see. So this was a beat on earnings per share. This was a beat on both, and they didn't really do it there. So this was a slight beat there on revenue. So I'm staying away from SI. SI, aren't they done? Didn't they get like delisted? I thought they got delisted. Yeah, they were winding down operations back on March 12th. I think it's done. They like collapsed and like filed like Chapter 11, I think. They're shutting down. So if you have shares in them, they're basically worthless. Greg, are you in Hellbiz? people got sucked into that GNS and Hellbiz and Bit Brothers and whatever things they were pawning off. Hellbiz. Hold on. What do we got? Hellbiz was going through dilution, I think. Like, the company's got 1 month of cash left with a cash burn of close to $12 million. And they've already got, convertible notes. Yep. And they've got an equity line of credit as well. They can borrow against and cost them money. So conversion price is at 50 cents. Yeah. What are they at now? Let's take a look. $0.11. Yeah, this thing's not going anywhere. You've got basically conversion rates at 50 cents, so even if it goes up to 50 cents, this thing's going to be basically going through a resplit. Can we even see that? Nah, I mean, this thing's just been down forever. Last time it was up. Yeah, I mean, was this the last time it was $1? Let me draw out something real quick. I don't want that. I want this. Find $1. Okay, so basically, the stock needs to get over this line, and it got close. I think it got to like 99 cents, and then it came back down. So, like, you needed this thing to be up over this blue line for like 10 days, or else you're facing being delisted. So, what's going to end up happening is you're going to probably go through a resplit. Even if it gets up to like 50 cents, the conversion for the convertible starts happening. And so this thing's basically going to end up with, yeah. They did an earnings report. I mean, it doesn't matter at this point. These guys they're in deep trouble there. Any thoughts on what is it? First Republic. Ugh. They got a bunch of gaps on the downside. I know some people are playing them thinking it might squeeze. I'm personally, I'm staying away from all these like bank stocks. No, I meant hell. What? Well, hold on, let me finish this one first. But yeah, just be careful with these ones. They're out of cash and they're gonna have to dilute, and they're gonna either resplit or delist. So neither option's good for retails at this point. Okay. Back to First Republic. I don't know about this one. I guess that they prop them up enough, it'll be fine. But I mean, you've got some major shareholders in this thing. You obviously had to sell off. Like, you had institutions selling off massively. This thing went down to what, like $10 or something like that. Used to be sitting high up here at their highs of 200 something. These guys knew that this thing was going down. People were selling during this time frame. Yeah, this might be okay at some point. There is earnings coming up, it looks like, on the 14th of April. So for some people, maybe they turn things around and they'll be fine, but they do have a gap up here at 21. If I was going to be playing this short term, I would be possibly playing it to a run to like 20 and then getting out. So, but personally for me, I'm going to probably avoid it. I know some people want to because it used to be worth a lot, but I don't know how much liquidity was pumped into it. I'd have to take a look at a lot more research than just a kind of glance at it, especially this one. I think you're thinking of SIVB. Silvergate is still trading. Is it? SI is still trading? I thought these guys were done. I thought these guys were basically just completely done. They don't even know how much they lost on the FTX deal. I don't like any of these banks, to be honest with you. I don't even like regular banks at this point, let alone the ones that are like highly exposed to crypto. 76% shorted. How much cash do they have on hand, though? See, that's the problem. I don't know. Like, can you trust how much they're supposed to be a bank? Like, you're supposed to know what your like collateral and all that stuff is at all times. And these guys lost like $8 billion and didn't know what was going on. Like, that's not a good thing. Yeah, their net revenue was hugely down. Like, they posted a $1 billion net loss. Like, I can't sit there and go like, yeah, that's something to buy. Yeah, I mean they're a possible squeeze stock now, being that they're so low compared to what they used to be. But like, it's so high risk that they're going to just dilute to raise cash because they lost a ton. So like, I don't know. I just feel like they're one of those people that, like, let's see, does SI even come up on here anymore? 76% of the shares shorted. They followed the 8K for what? This 8K is for the wind down of operations and voluntary liquidity. The bank agreed to a prepayment of a secured loan under the bank's leverage program. Okay, so this was the money they took in. So that's how they were able to keep their doors open. So they're taking on the liquidity that was given to them by the Fed. Because I thought they were going to be absolutely done. They were literally here, like, talking about delisting. Because they couldn't file. They couldn't even file their financial statement because they didn't know how much they lost, which is crazy as a bank. Like, you should know at all time. I don't know. It seems like they're bailing out everyone right now. Just like before. Oh, no, it's not. It's different this time. No, it's not. These banks that are basically just giving up this liquidity pool, you know what they're going to do? They're just going to pass on those costs to their customers. So you just paid for it just in a slightly different, way. All right. What do you want to look at? Dirty Senor Burrow. What are we looking at? Oh, this is your halogen. All right, let's take a look. They've got warrants too. So this is one of the ones you're long on, right? You like these guys long. You like their tech. Isn't that the deal? Fish through this one out. Wait, what? Fish threw out what? This one right here, halogen? Oh, you're saying he threw out, like, not like bad. He actually just recommended, like, hey, take a look at the stock. Yeah, I think he was doing research on a couple things, and this was one of them. Cost of revenue's gone down. That's good. Still a loss. It's a growing company, it looks like. They're running out of cash, though. That's the only thing that pops out right there, is they spent a lot of cash on, looks like, investments and other current assets. Still got positive shareholder equity, but it did go down. So... what did these guys do? Hydrogen and syngas fuels. I don't even know what a syngas is. Closed loop system for electric generation and process heat applications. Carbon free. How do you produce carbon free? I guess there's a couple of different ways. Ultra high temperature, cement, refining, mining. With a robot. Yeah, I mean, I think I'd have to research the technology, to be honest with you. Yeah, I mean, it doesn't look horrible. Nothing financially looks terrible. I would say I probably would want to research just the technology, because, like, who's using this? Like, how do you make your money, right? Like, that's always the first thing you should know about a business. How do you actually make your money? And if the answer is, we don't really know, that's not a good idea. So... maybe we research this one. We'll go in and help Fish or Wall Street Wizard, whatever his new one is. We'll go in looking at him. All right, I'm gonna jump off here because I'm gonna try to watch a show before I go to bed. Now with kids, I get to do almost nothing, so I'm gonna take a look. By the way, fun little movie if you guys get a chance. My brother gave me his Hulu account, and I was able to watch Triangle of Sadness. And for anyone who hasn't seen it, it is an absolute train wreck of a movie in the best possible way possible. Like, I mean that in like a good way. It is just like the slow, like, just you're just like shaking your head like half the time. So if you get a chance to watch that one, it is well worth it. Woody Harrelson is in it. He doesn't have a huge part, though. He's like in it for like half the movie. But it's just a really like interesting like descent into like chaos, and like it breaks down. It's a smart movie. Like it breaks down like social classes and like, yeah, it's pretty funny. So if you get a chance, that one's pretty good. So you guys have a great evening, and I will go ahead and talk to you guys another time. I'll be on the Discord tomorrow, though. But yeah, check it out. Real fun. All right. Have a great evening, guys.